Welcome back to TeshKidFX for another Hbar price prediction update, which at the time of this recording is holding below the 20-day MA here on the 1 hour chart, on the 4 hour chart, which is now acting as resistance for us to continue gearing up. We are also holding above a key area of support at around the $0.0566 mark, which is now acting as support for us to continue gearing up. We have also continued to obey the Elliot wave structures, where we have been seeing a bit of a breakdown to the lower side in the formation of this wave 2, in a move that has now fully maximized our minimum retracement area, highlighted here on the charts using this blue target area. And all this is playing out after we fully peaked in the formation of that first wave in a move that gave us a high at around the $0.078 mark, and that was after seeing our low on the 23rd of March, where we saw that impulsive move to the upside, giving us the high for that first wave. And to get the minimum retracement area in the formation of this wave 2, I used the Fibonacci's, connecting them from the low of the first wave to the high of that wave 1. And that move gave me a minimum retracement area between the fib level 0.5 and the fib level 0.78. And I said to you in my previous videos that the moment we lose the fib level 0.78, then that would suggest that we have now hit invalidation points of this Elliot wave structure that I have right here. And you can see that at the time of this recording, we are holding below the fib level 0.78. And at some point we had even lost the fib level 0.88, suggesting that we have now hit invalidation of this Elliot wave structure, and I now need to remove it from the charts and give you the alternative scenario, which is given by the Elliot wave structures that are giving me the long-term expectations here on the Hbar chart, where you can see that after seeing our low at around the $0.0356 mark, we saw that 5 wave structure to the upside, having the wave 5 giving us a peak at around the $0.0987 mark, and also completed the formation of that first wave to the upside. Then we started a corrective structure in the formation of this wave 2 in a move that bottomed out within this yellow target area right here, that I came up with by connecting the Fibonacci's from the low of the first wave to the high of that wave 1, and that lies between the $0.0672 mark and the $0.0491 mark. And there are high chances that in case we continue seeing further breakdown, and also remember that we have now hit invalidation of our micro Elliot wave count over here, there are chances that Hbar might continue seeing further breakdown to a point that we can lose our key area of support at around the $0.0566 mark. And in case such a move plays out, then that could possibly give us a reset of this higher Elliot wave count too within this yellow target area. And in case such a move plays out, then I think there is no reason for panic, because that would be another perfect entry into Hbar, so that you can be able to ride that massive pump to the upside in the formation of these higher Elliot wave count 3. So that is what you can expect here on the Hbar chart on the short-term scenarios, which also seems to be a worst case scenario here on the Hbar chart, but it's the most ideal situation that I can have basing my analysis on the Elliot wave structures. And once you have the confirmation or maybe get a reset of this second wave, then from there we can start sketching out our 5 wave structure to the upside, having the wave 5 fully maximizing our minimum target areas in that wave 3. And also taking a look at the indicators here on the RSI, we are trading at around the 43 mark, meaning we have massive room for us to fully support higher prices. But in case the breakdown continues, that will still be supported here on the RSI. Also taking a look at the MACD, we have been able to print a bullish cross, though we are not seeing an increase in the buying momentum, but we are yet to see that increase in the buying momentum. So let's be patient and see how that plays out, and I'll be keeping you updated.